Hey everybody, it's me, Gregory Manarino. It is still Tuesday, September 3rd, 2019. This is my post-market wrap-up, and we have to talk seriously. Epic action in the bond market today. Let's start off with the basics. Stocks finished lower across the board. Dow Jones Industrial Average down about 285, something like that. All the major indices in the negative here. However, the Dow Jones Industrial Average was down about 425 at the low. Let's talk about that real quick, because that's where this, it was almost like a seismic shift in the bond market happened, and it was obviously somewhat positive for stocks. Here we go. So, earlier, I explained to my lions out here in a tweet. I posted it on Facebook and in my chat room on traderschoice.net. I said, watch for the 2 to 10 spread to widen, and you'd see a sell-off in the stock market. Well, that's exactly what happened. I got in on that trade on the short end. Unfortunately, I missed the rebound, and I would have made a freaking fortune. How did I miss it? Because I was out here doing this blog for all of you, and that's fine. I'll take the hit. But something happened at the low, and it really, I'm not going to say it took me by surprise, but maybe a little bit. There was a surge of cash into the short end of the curve. So what did that do? When all this cash made its way into the shorter end of the curve, which is generally a safety play, I want you to think about what I'm going to tell you. When you see that happen, it causes yields to drop. You understand? I know it sounds weird, but when cash comes out of the debt market, yields go higher. Why is that? Well, because it's kind of a luring device. Hey, you know what? Debt is yielding X. Let's put some money in it. As soon as you do that, the yields start to come down. You understand? It's kind of an opposite effect of the stock market. A lot of people have a hard time with it. So, again, stocks at the low, all of a sudden, it was epic, man. A huge surge of cash into the short end of the yield curve. What did that do? Well, it had a major effect on the 2 to 10 spread. It absolutely reversed. And now the 2 to 10 spread, let's look at this together. I think it's, here we go. Look at the 2 here. 1.46. Look at the 10, 1.467. So, it's slightly out of inversion, ever so slightly. It's moving around a little bit, as you can see that. We're pretty much flat. But we had a spread that was widening. It was going deeper into inversion. And then all of a sudden, look, I don't want to sound like a conspiracy theorist or something, but when you see a move like that, you have to wonder, where is all the cash coming from at the same time stocks are at the low? You understand? Put that together in your own head. Dow Jones Industrial Average down 425. You got the 2 to 10 spread worsening, going deeper into inversion. And then all of a sudden, like the freaking cavalry comes in, surge of cash into the short end of the curve, and all of a sudden, whammo, you got, the short end of the curve comes down, the whole yield curve drops. But the short end of the curve dropped further. And let me just show you this real quick so I can prove my point to you. You see all the red? All the red. All the red. That's the entire curve dropping. But the short, here we had an inversion. Let's say, for example, here's the 2, here's the 10. We have this inversion. And then all of a sudden, the whole curve dropped. But this end came down harder because of the surge of cash into that. Now, generally, again, when you see that as a trader or an investor, you go, whoa, hold on a minute. This is a major safety play. But the effect of this was, again, it kind of nudged the 2 to 10 out of inversion, I don't think it's going to last. I really don't. I can't imagine a way they can keep the short end of the curve from continuing to drop. But it is kind of an interesting concept. Now, the dollar. I did a video like a month ago. I explained to you we're going to see continuing dollar strength in this environment. That's exactly what's going on here. Now, despite the dollar getting stronger here, are you watching gold and silver? They've gone crazy here. Again, these are more people getting smart enough to bet against the debt, become their own central bank, look for dollar alternatives. We know what's going to happen, people. Mark my words. It's just too stupid. They have no choice but to inflate. Dollar intervention is coming. There is no way this dollar is going to be allowed to stay where it is. So a couple of things are in play here. Drastic cuts to the federal funds rate, which will drop the short end of the curve. Again, lower. The Fed has to get into the market and buy debt. All right, just like today. Kind of an interesting prelude to what is about to happen. Look, could this have been the Fed today that went in here? I mean, they do have a trading desk and bought all that short-term debt to squash the yields lower. It could be. It could also be a major safety play. Investors saying, hold on a minute, I don't like this. Let's find some safety in debt and lose money. Think about it. You buy debt here. It's yielding less than the rate of inflation. You've got to be brain dead. But this is the mentality of some people. I don't know. I don't know what to make of it. Is it suspicious to you? Do you believe, for example, this was the Fed getting in here and buying that debt to push short end of the curve lower so the yield curve would normalize a little bit? Or do you think this was a legitimate safety play? I don't know. I'm not going to say it was the Fed. It could have been the Fed. I mean, they have a lot of firepower. They can print cash out of thin air, add it to a digital screen all they want. They can never be maxed out. Can't happen. So that's a very distinct possibility. But you saw the effect on the market. Once that yield curve kind of normalized a little bit, I mean, stocks just ripped off the low. I don't know. A little suspicious to me, but I don't want to sound like some kind of a conspiracy theorist here. I'd love to hear your take on it. So again, what we witnessed today was very interesting because it shows you what will happen, notice my words, when the Fed cuts rates again. Now, 1% is what the president's calling for. He was on it again today, calling for it, blaming the Fed, again, that they're not acting fast enough to suppress rates further. They're not acting fast enough to greatly expand the debt. But the president did not mention a word today about factory orders. I mean, falling off of a cliff. The entire manufacturing sector falling deeper into contraction. The fact that if this continues, there's going to be bailouts there too, and there's going to be a lot of people that are going to lose their jobs, thousands and thousands upon tens of thousands. We won't talk about the effect of the trade war on our companies right here in the United States. I mean, if we can't make things to export, look what's happening to the factories. Look what's happening to manufacturing. You will not hear it. It's like it doesn't even exist. That to me is a lie by omission, I would say. Anyway, look, you know what? With regard to that, let me just say this. I want the president to be successful, and so should you. I don't care what side of the aisle you're on, because if the president is successful, we're all successful. The only way this man can gain some type of credibility is to stop lying. He got caught today in an absolute lie of epic proportions, saying China trade talks were going well. Again, it's a provable lie. He's got to stop. And every day, Mr. President, is another day you can decide to turn this all around and level with the American people. I guarantee you, I know you think you have a lot of supporters now. That is actually not proving to be true. if you look at how many people think you're doing a good job, it's dropping. But you can turn that around. If you start to gain credibility, Mr. President, stop lying. Start today, right freaking now. If you get to hear this, I doubt it's going to make even a dent. But that's just the way it is. So anyway, going back to this market real quick. At the low, down 4 1/4, a surge of cash into the shorter end of the yield curve, dropping those yields there, pushing the 2 to 10 spread out of inversion. I'm going to look again here. Yeah, it's the same as I just showed you. Actually, it's a little more dramatic here. 2 is 1.46 and 10 1.47, so clearly out of inversion there. That happening at the exact same time. Again, I don't want to say it's suspicious. It could literally be a safety play. It could literally be investors saying, I gotta buy debt right now. Sounds insane to buy debt that's yielding less than the rate of inflation right now, but some people are like that. And it would take an enormous sum, I can't even imagine what it would be, to cause that type of action in the debt market. It's freaking epic. It's the truth. So again, we're going to need to watch that 2 to 10 spread if this spread stays the way it is now, in other words, not inverted or flat. This may be a positive sign for the stock market, at least in the short run. But if that starts to drop again, that's going to send an ominous signal to the market. So keep your eye. Look, I have a chart right on my lovely website for you. It's not for me. It's for you right under the chat room. Take advantage of all the charts I have there. I got a dollar bullish chart for you. You can see the action in the dollar. I got a bond market chart there. You can see what's going on. You can see the buying and selling right there. I got another charting system there where you can put in any ticker you want and analyze it. It's free. The chat room is free. Everything is free. If you're not utilizing this resource, that's all free for all of you, and I pay for it. I mean, I pay for that. You're missing out on a lot of information and a lot of smart people in my chat room, too. I want to give them all a shout out. All right, so let's keep our eyes on this, people. Seriously, the debt market is where it's at. And today should be a clear example for you that you need to stop focusing on the stock market and look at the debt market, and you'll have a better idea of what's going on. All right, it's look here, don't look here. It's pretty simple. All right, look, I'm out of here. I will see you in the morning. Please share this video. Get it out there. I'm counting on you if you're part of my team, and my team is getting pretty damn big. I love you all. Bye-bye.